Well, in the series, Damien Bunce, Chief Customer Officer at Exness, guides us through the most important steps, from teaming up with a market maker to using leverage responsibly. Exness is the world's largest multi-asset retail market maker, employing more than 2,000 professionals worldwide. Damien, welcome back. Let's start with a recap. What did we learn in the previous episode?
In the previous episode, we spoke about the role of the market maker in the brokerage industry, some of the pitfalls to trading, and some of the important considerations to make, when you approach the platform for the first time and put on your first trade.
Now, in this episode, we'll try to find out more about the technical details of trade. We've picked three of the biggest concerns of traders, which is liquidity, leverage, and gaps. So let's start with liquidity, as traders need access to securities, currencies, and derivatives. How does Exness guarantee a healthy supply?
Well, the role of the market maker is to ensure that at any moment of the day or night, there is adequate liquidity or supply for all of our clients to be able to trade. If at any point in time we effectively run out of liquidity, then our clients stop buying and selling and we stop earning money. So our role is to make sure that we have a very big and healthy supply, not just in foreign exchange and stocks, it's also in cryptocurrencies, in gold, in oil. That is the role of the market maker. It's to be there with enough liquidity to facilitate active buying and selling.
How big is it? Give us the numbers.
Well, it's very big. I mean, Exness is the largest retail market maker in the world, but to put some context around that, the FX market alone executes about $7 trillion per day. If you carve out the retail market, it's about $1 trillion a day. And of that, Exness executes $150 billion per day. So we're a fairly substantial, 15 or so percent market share. When you think about cryptocurrencies, it's obviously a much smaller, newer industry. But in the cryptocurrency market, roughly 68 billion is traded per day. Exness trades 2.5 billion per day currently, roughly 3 to 4%. So it's an area where we're still very relevant. There's actually one very big player in the crypto space, and then a number of others, and we're in that sort of segment at the moment. Our liquidity pool typically will execute around 3.5 trillion per month.
The promise of great liquidity leads us to our next subject, which is leverage. Now, traders have a love-hate relationship with it, should we say? Mm-hmm. Why do we need leverage at all?
If you're somebody that's used leverage and you've lost money, you'd be asking that question. But equally, to your point about love-hate, leverage allows your average person to trade expensive products that are heavily tradable. A good example is gold and oil. If you don't have leverage, you could be, spending $20,000 to $30,000 alone to buy one lot of oil, just in margin. I mean, it's a very expensive product. Leverage allows you to access these products, and why shouldn't you? If hedge funds can get leverage, the richest companies in the world, why can't retail have that opportunity? But there's a caveat to that. The upside is that with leverage, you can lose all your money very quickly, which is why responsible brokers ensure that there are adequate warnings and training so that you don't effectively over-leverage.
What support and protections are in place on your platform to help control losses?
We make sure our customers are educated to use stop losses and indeed take profits. So it's a function in trading that caps your downside. So you buy at 10, if it moves to 8, you want to stop trading at that point so that you don't lose more than 8. So that's a stop loss. So we offer that functionality. In addition to that, we offer negative balance protection. Now, this is a regulated activity. We didn't invent this. It is something that's expensive for the broker, but it means that if you're trading with leverage and you lose more than your deposit, then the negative amount is compensated by the broker or the market maker. It's a responsible way of allowing clients to gain access to more upside, but also capping their downside. So it's an attractive product in that sense. The other functionality that we offer is something called volatility protection. It's a very important tool. The essence of it is, without going into too much detail, but the essence of it is there are periods of time when even if your equity falls below zero, so you have no money on your account, in fact you go below zero, that we enable our clients to continue to trade and keep their positions open.
I want to go back, if it's all right, to the claim you made that negative balances are protected. What would you say to a skeptic who claims that there's a catch to this, or it encourages irresponsible trading?
Well, negative balance protection was introduced by the regulators. And the idea was that, if you are going to offer leveraged trading to your clients, then okay, that's your choice. But it's important that your client never loses more than their original deposit. So it allows them to get more upside, but it also protects their downside, which is a very responsible measure from the regulators, and brokers, comply with that. We took the decision to provide that product and follow those guidelines because we believe, in fact, that this is true democratisation of financial services. We are allowing somebody to punch above their weight to trade in products that were only really available to the wealthiest, the hedge fund managers.
Markets can behave chaotically and often lead to slippage. Before we go into it too much detail, just explain, if you would, or define it, what exactly is slippage? When does it occur?
Yeah, sure. Slippage is a real pain point in the industry, and it's a situation that occurs in all markets, by the way. But if we take, say, the foreign exchange market, for example, slippage occurs when there's an abnormal gap between one price printing and the next price. So as a responsible trader and one that's well educated, I put a stop loss on at 8. So what that means is that if the market moves down to 9 to 8, suddenly my stop loss is triggered and I'm not going to be happy. I've lost $2, but it hasn't gone down to 5. Well, that's all very well in a liquid market. If the market is illiquid, because, for example, you've traded on the Sunday night, then it's possible that what can happen is that you've got your asset at 10, it moves to 9, and then it moves to 4. And that gap can occur during illiquid periods. Maybe a very big news event occurs, maybe a market's just opened. So, for example, it can be dangerous to trade on a Sunday night when the only market that's open is in New Zealand, and then the market in Japan opens. That could create a gap. And why that's a problem is, imagine, for example, that I've purchased an asset for 10, and I'm happy with my position, but I'm worried that it might go to 8. Your stop loss order at 8 has fallen between the gap. And so technically speaking, you've lost a lot more money than you expected. And there's confusion there. Have I been ripped off? Why did this occur? I put an explicit, well, it occurred because there was a gap in the market. And this is a fact of trading. And in fact, it's only the market maker in our type of business that can overcome this, because we, at that point in time, institute something called our gap level rule. And depending on the criteria, because we don't compensate for that gap in all circumstances, but depending on the criteria, we may well give you your price at 8 and not the market price that was at 4.
Damien, thank you so much. Very insightful. Before I let you go, what can we expect to learn in the next session?
Well, in the next session, we're going to talk to you a little bit more about what's behind Exness. I think that's a little bit about the people, the ethos, and the products that we're likely to bring to market for our traders, the advantages that we're evolving, in the months and years ahead.
Thank you. That was Damien Bunce, Chief Customer Officer at Exness.